Global markets are on tenterhooks ahead of US jobs data tonight for clues on the Fed's rate cut path. ANZ Research brings its RBA cut call forward to July after weak retail sales, and South Korea's inflation rate may allow for one more rate cut there. It's coming up in 5 Things in 5 Minutes on Thursday, July the 3rd. And then, in our deep dive interview, ANZ Economist Maddy Dunk analyses the recent pickup in Australia's housing market.
Since the RBA cut rates, I would say Melbourne and Sydney have come out of that slump that we saw late last year.
But first, in 5 and 5 with ANZ, US stocks are up 0.3% and US bond yields are up around 3 to 4 basis points this morning, with traders looking ahead to US non-farm payrolls data for June later tonight. Earlier, traders shrugged off private payrolls data, the so-called ADP data, showing a 33,000 fall in jobs in June. That was well below forecasts for a 100,000 rise. ANZ Group Chief Economist Richard Yetzinger says the official non-farm payrolls data tonight will be the key component of the patience versus July rate cut debate on the FOMC.
The market is expecting a continued slowdown in the headline rate of job growth and actually this time a tick higher in the unemployment rate. That will, if the number's in line with that, it will take the unemployment rate to the highest since October 2021. If you get a softer number than that, it will give a lot of ammunition to those who are arguing the Fed shouldn't be waiting until September or in fact later, that the Fed is already potentially behind the curve.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.3%. The 10-year US Treasury yield up 4 basis points to 4.29%. Gold was up 0.3% at $3,361 an ounce, with West Texas Intermediate futures up 2% at $67.41 US a barrel. The US dollar index was flat, as was the Aussie dollar at 65.80 US cents, and the Kiwi also flat at 60.84 US cents. Number 2. ANZ Research has updated its RBA rate cut call to July from August. ANZ Head of Australian Economics Adam Boyton says a cut next week is the path of least regret for the central bank's board.
It's more a combination of the stalled up trend in consumer sentiment, the soft 6 months we've had now in retail trade in Australia following the data we got yesterday, and a sense that the timing of this next RBA board meeting is a little problematic given it's occurring so close to that expiry of the US tariff pause. And so for the RBA and the board, the question becomes, do we need to cut now? And I don't necessarily think they need to cut now, but is there a chance we look back in 3 or 6 months and go, actually easing in July, getting it out of the way, lowering the cash rate and continuing, I think, what is a path toward getting cash rates back into the neutral zone is the path of least regret.
Number 3. Adam has penciled in another cut in August, but says the tone of the post-meeting statement and press conference will be important.
Do they again discuss a 50 basis point rate cut? I don't think there's cause to do that, but if they do, that's a very obvious signal. How data dependent is the board going to be around the next meeting? Does the RBA think that conditions globally are looking better, worse or unchanged relative to May? I think all of those things are going to be fairly important around the timing, and then that's before we get to, of course, how the domestic data fall between July and the August board meeting.
Number 4. That call change followed the release of Australian retail sales data for May. Growth of 0.2% came in lower than market expectations. ANZ economist Aaron Luke says the 6-month annualised rate is at its lowest in 12 months.
The rise was mainly driven by a rebound in clothing sales. Last month in April, the weather was a bit warmer than usual, so in May we did see it coming back up by 2.9%. Department stores was the only other industry to see positive growth, up 2.6% in the month, but that wasn't enough to offset the 2.9% decline we saw in April. Interestingly, food-related spending also fell for the first time in 2025.
Number 5. South Korea's headline inflation rate ticked up to 2.2% in June, above the central bank's 2% target. ANZ economist Crystal Tan says underlying inflation, though, remains soft, and soft enough to continue rate cuts, with the core measure at 2%.
From a growth perspective, South Korea's economy is performing below potential, so there's certainly still a case for further policy support. But now with higher fiscal spending on the cards to do the heavy lifting in terms of supporting growth, we do suspect that the Bank of Korea will slow the pace of its easing, especially given, renewed concerns about a frothy property market in Seoul. So our base case is, yes, the easing cycle will continue, but we probably will only see just one more 25 basis point rate cut this year.
Crystal tan there. Now, in our deep dive interview, ANZ Economist Maddy Dunk talks to Alex Tarrant about Australia's housing market, which is experiencing a bit of a boost, following data yesterday showing building approvals rose 3.2% in May.
So we're seeing some signs of resurgence in the housing market. We saw building approvals ticked up in May. We saw a lift in unit approvals. Unit approvals have been quite weak in recent months. So there was a bit of a rebound there. I think building approvals are a pretty jumpy series, so you can't read too much into 1 month's data. But we are seeing that continued housing price strength. I mean, we saw 0.6% monthly growth in June. That followed 0.6% monthly growth in May. So that may be giving people a bit more optimism about the outlook for housing.
And those capital city house prices, where are you seeing the strength there?
Look, the real standout's been Darwin. It's not one that we tend to look at or concentrate that much on, but we're seeing that housing prices are up 7.7% this year. And to put that in context, the next strongest capital city would be Brisbane, where we've seen housing prices are up 3.2% so far this year. So a lot of strength coming through in the Darwin market. That might be partly due to the fact that generally speaking, Darwin looks more affordable than other capital cities. And in terms of levels, the level is still much lower than a lot of other parts of the country. But also, if I look at some of those fundamentals around supply and demand, what we can see is that supply has not kept up with demand. So in other words, supply hasn't kept up with population growth in Darwin over the last few years.
Any ongoing weak spots?
Look, I mean, last year we were all talking about the weakness in Melbourne. We've seen a bit of a pickup in Melbourne's housing market since the RBA cut rates. I would say Melbourne and Sydney have come out of that slump that we saw late last year since the RBA started their easing cycle. Probably the place that stands out the most in 2025 would be Canberra and the ACT. We've seen that that's reported the softest housing price growth across the capital cities. And then in the month, Tassie was the one that was soft. So we saw that Hobart actually recorded a fall. It was the only capital where we saw prices decline in June.
What do you think could happen for the rest of the year?
Look, if I think about the forward indicators, they do point to continued resilience in the housing market. So auction clearance rates, for example, have been hovering around 65% for the last month or so. And generally a 65% auction clearance rate translates into around 6-7% annual growth in housing prices. So it does point to continued upward momentum in housing prices. And even just looking at things like the daily housing price series, we have seen that momentum's generally held up since that May rate cut. Future rate cuts are likely to support housing prices moving forward. And then the other thing too is that supply is pretty soft still. So if I look at new listings, they're down compared to last year, down about 6 or so % compared to last year. Sales volumes are also down as well, quite weak compared to where they were last year. So that suggests that yes, things are selling, but there's not that much for people to pick from. And I think that that's likely putting some upward pressure on prices too.
Maddy Dunk there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, July the 3rd. Catch you tomorrow with analysis of what the US jobs data could mean for the Fed's rate cut path. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.